And now for a closer look at the bumpy ride on the local market. Earlier I spoke to Marcus Padley from Patersons Securities. Marcus Padley, another day, another gyration, a pretty sober session indeed.
Certainly was, Ticky. That V-shaped recovery has quickly turned into an M-shaped recovery, and doubtless we'll have a W after that. It looks like buyers have exhausted themselves for the moment. Everyone who's in has got in over that last 10% rally, and now with Angela Merkel effectively telling us that if you think there's going to be a European solution on Monday, you are dreaming. We have certainly sobered up, and resources in particular took an absolute belting today.
Yeah, there was a lot of blood on the floor almost with resource stocks. Rio Tinto, BHP Billiton, Fortescue Metals, Atlas Iron, they were all hammered.
Yeah, but you had Fortescue down 9%. How many days of the year does Rio fall 5% and BHP over 3%? It seems, apart from the fact that Chinese GDP numbers saw their third slowing quarter in 3 quarters, although I don't think that's a tremendous worry. But what has worried the iron ore stocks in particular, those are the ones that really belted, was the Fortescue third quarter production numbers and the message from them that Chinese steel demand is weakening and Chinese steel makers are putting pressures on suppliers. And if you look at the iron ore chart, whereas the market's been a disaster for the last few months, iron ore prices have kept going up and held the iron ore stocks up. And now finally iron ore prices are tipping over. And they are, you have to separate resources from the rest of the market. They are not a steady eddy sector that's safe. They are risky assets. And the risk is that the iron ore price falls, and it is for the moment. So that sector absolutely belted, yeah.
To the Telstra AGM, would it be fair to say that investors heard what they wanted to hear?
Yeah, they did. People are holding Telstra at the moment as an alternative to the market, almost as an alternative to term deposits. It's one of the stocks that's come into its own and actually gone up because the market's gone down, and to have them deliver at their AGM, not so much the NBN deal, that was a foregone conclusion, but to deliver the message about the dividend being okay and possibly having a buyback after the NBN deal is exactly what income investors want to hear. I would just say, though, has performed well. It is a bit peaky. You've got 4 months till the next dividend. You know, you don't need to rush Telstra at any point, but good AGM.
And Woolworths, we looked at it yesterday, but now the company has announced that it will go to the market with a $500 million capital raising.
And it may be bigger, Ticky. If they get bids for 750, a billion, over $1 billion, they'll take those as well. So you have to bear in mind, applying for this as a retail investor, there's no great price pressure on it. You know, you're not going to make capital gains. The yield is 8 to 8.25. That's obviously attractive. It's unfranked, though. If you are interested in it, you should be contacting your broker now, because brokers are offering firm stock and will be for the rest of this week.
Marcus Padley, thank you again for joining us.
My pleasure, Ticky.